Alright, so screen share, yes. Alright, can you all see my screen? What can you see? Yeah, one says yes. So general financial product advice warning. That's the one in front of you. Brilliant. Yep, fantastic. As usual, we'll start with NP Financials Pty Limited. NP Financials or NPF advises all service recipients of the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. So I'll give you 10 more seconds to go through this slide before we start. Okay, so I think you are done with it, and then we'll start. Thanks to all of you who are actually giving us a little bit of support in the form of going to our website. So if you write in the Google NP Financials as in front of you, if you write this, then this fellow will come in front of you, and then you can have the website or the contact us and everything, as you know, and directions and saved all these things. Most important thing is if you review us and give us some ratings, and it will great. It will be a tremendous help to us, because we think we are doing a little bit of extra. We always go a little bit of extra out, and try to help you out in whichever way we can. So for writing a review, you can go write NP Financials in Google and write a review, and you can add, and you can view all of our Google reviews here. So those of you who have already given us, the latest one was from Marty, dear Marty. He has written a wonderful review to NP Financials, and the head teacher Partha has such patience for your learning and an amazing attitude to wanting to see you progress to the next level of trading. He makes the experience very enjoyable and has made such an impressive impact on my trading that words cannot describe. Benefit definitely, hands down, go to if you want to be successful in the business. Thanks for your time, Part. Thanks a ton, Marty. Really appreciate. And those of you who have not done it, and I would request you to please give us a review either in both, I would say both, in Facebook as well as in Google, and I showed you how to do that. Just type in NP Financials and do a little bit of favor to us. Okay, that really appreciate. It means a lot to us. Okay, so with that in mind and with a request to you, we'll start with our discussion today. And I have requested always to send your questions to us, and the questions I got from Bankim. I'll go through it. He has written, please discuss support and resistance and pivot points, Heikin Ashi review. So 3-4 things I'll just write in so that I don't forget. So dear Bankim has requested us to discuss support, resistance, of course its impact on trading, and pivot points and Heikin Ashi. Yeah. So these are the 4 things which I have got. Any other things? If you want to support, resistance, pivot points, Heikin Ashi, yeah. So we'll do that. And in the meantime, if something comes to your mind, please you can type in, and then we can take it forward from there. Okay. Support, and first of all we'll discuss support and resistance. Support for long, of course, so we'll write down for long, and resistance for short. Yeah. So this is the, I think, the Bible of, or not 100% Bible, but maybe 50% of the what they call it a Holy Grail. Yes, that's the word. Holy Grail of trading. Support, buy at support, and sell at resistance, and so on and so forth. For that, we will take any currency pair. The one in front of you will start with that. So this is an Euro Aussie in front of you, and this is a daily chart, as you can see, and we'll start with support. So as you can see, from up to this point, I think, yeah, up to this point, from September, not before, yeah, up to, yeah. So it was in a kind of range, although the range is big, but we can see how to identify the support resistance. So we'll go to the lowest point in front. Supposing we are on this date, which is 20th of February this month, 7 days back, 8 days back, we'll see what was the lowest point, is this one, and what is the highest point, this one, and whether price has within playing in that range. So 159 to 167, it's a big range, 800 pips here. So within that 800 pips range, we have a smaller range, which actually is this one, covering I would say this much. So from 12th of September till 20th of February, we had so many days, and the range was from this low to this 417. So the big one has 800 pips, and the small range is having 400 pips. So having said that, how to identify the support resistance? It can be done many ways, and one way, best way to do the support resistance is a dynamic one, which we time to time we design in our strategies, or you can do manually if you want. If you have the time and the knack, you can do it. So for example, if we do this, so this would be a support zone of support. Yeah, as you can see, why this is a zone of support, because we always know the left hand side, we never know the right hand side, so we'll always start with the left hand side because that is known. So this is a zone of support because price did not close below this support. Price did not close below this support, and here is a crack and snapback. Price closed below, but the low was not taken out, immediately closed above the, and again this one, price closed below and low not taken out, and immediately snap back. So this is a crack and snap back, and this is a solid support. So with this in mind, so this is a possible support in front of you. Yeah, all of you agree? If you do not agree, please type in no, I do not agree. And then okay, so if that is this is one way, and the other way to identify the support resistance is you can actually go to your pivot points. So if I go to pivot points and put the pivot points, so that is another one. So for example, if I put the pivot points and change this to monthly, because this is a daily chart, and then take this out, this will give us a display only last period. So as we can see from the pivot point perspective also, we had multiple supports from the pivot point perspective. Same zone S1 support, same zone S1 crack and snap back support, and this is not a quite a pivot support, but this is a double bottom support from, and this is a support here from the pivot points. Yeah. So one other way to look into the pivot points, I don't know whether you do it or not, because but we do it from time to time. We actually do it. How to do that is just extend. For example, supposing you are here, which is 27th of December, and you are seeing that it has crossed the S1 for the December. It has crossed, price has crossed. It means price has crossed the S1, but possibly going to S2, but it is not going to S2 because we had a open and close below the Bollinger Band. This is a 20 period simple Bollinger Band in front of you, simple one. So we can make this thicker. So you understand that this is a oversold, and this is crack and snap back on the Bollinger Band. So this is close below and close above. So this is a crack and snap back. This is a crack and snap back on the Bollinger Band as well as S1. Close below Bollinger and close above Bollinger. So Bollinger is a dynamic support. Up is a dynamic resistance, down is a support, up is a resistance. But the disadvantage of Bollinger is it can continue to tag like this, support, 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 support. So unless and until something happening. So in this case, what happened? Something is the crack and snap back. It closed below and below the Bollinger, and it closed above the Bollinger. Immediately cracked and snap back. So how to take advantage of the pivot points? So I was telling you that if you do not know whether it is going to go to S2 or not, but we saw a crack and snap back, so there is some confusion here. And in that confusion, what happens to, how to take advantage of pivot point support resistance is you can go to this segment and extend the pivot point. So for example, we can extend this pivot point. The pivot point was 160.35, so we'll make that 160.35 exactly to match 160.35. How much? 160.30.5. Yeah, 160.30.5. So what we have done, we have extended previous period, some previous period S1 as a pivot support, and you want to see that because last month pivot had a crack and snap back here, let's see whether this is a crack and snap back on the pivot point. We are already seeing a crack and snap back on the Bollinger, so this is a crack and snap back on the Bollinger. So those of you who are practicing this crack and snap back, please type in crack and snap back. Let's see what happened there. It's overwriting. Yeah. So we had so we want to see whether the crack and snap back on the Bollinger Band is actually also valid for crack and snap back on the previous period pivot point. So this way, Bankim, you can actually take advantage of the pivot points as a support resistance, or a support resistance as I drew in front of you as this one as a support resistance. So there are multiple ways. Bollinger Band also a support resistance, dynamic support resistance. So we had a support which is identified from the base formation 1, 2, 3, from the extended pivot points 2, and on the Bollinger dynamic on the crack and snap back. So why we have extended pivot points? Because it is not going to go to S2, but it is trying to do a crack and snap back. Let's see what happens after this. So we are still on the support, and we are still on the crack, and now here is a crack and snap back on the pivot point. So what we will do on the previous period pivot, that's why we keep this previous period crack and snap back, because it's closed below the previous period extended S1 and close above the previous period extended S1. So this is a crack and snap back on the pivot point. This is a crack and snap back on the Bollinger. So if you see this, then you see, oh, this is good, because you have three supports. One from the base formation, which is going on from September. Base formation takes time. So September, and second one is the previous period pivot points extension. So that is number 2, especially on a crack and snapback situation, like close below the pivot points and close above the pivot points. And then we have a dynamic support, which is Bollinger Band, lower band, and in that lower band we had a crack and snapback close below the Bollinger and close above the Bollinger Band. So far so good. Any question? How to identify a support? Remember, it's not rocket science. The rocket science is in our brain, because our brain cells actually are very poor unless and until we are practicing it millions of times. I say repeat, millions of times. If not millions, at least hundred thousands or thousands of times. So that's the rocket science. To repeat is the rocket science. Okay, so this yeah, all good. I got Fibonacci also support. Yeah. So Sri saying that Fibonacci can also be a support resistance. Yes, it can be a support resistance. So what is the Fibonacci support resistance? Supposing we are here on 2nd of January or 3rd of January, we take a Fibonacci, and when we are here, we are seeing crack and snap back to back. and Harami and Harami back to back Harami. This back to back thing is very important. It is extremely important, as you have probably noticing from our discussion and postings, that this back to back thing in whether it is in any instrument, actually that can be a tremendous thing. Like this one we posted on 24th of the 24th of February, in which we said that there is back to back 1 2 3 back to back bearish engulfing, and Pierce, and this is actually Harami, this is Evening Star, and this is bearish, massive bearish engulfing. Yeah, so this is a daily, and we said that if it is low is taken out at 13,559 on 24th, with or without anything, coronavirus and all those things, I don't know. So on 24th we did technically 1 2 3 back to back, and we, on seeing that, we posted this on 24th, and our price objective 12,000, first one 13,470, 358, 250, 87 and 993, and you know the price is now around 12,000. Yeah, now the price is around. So the point here is to see the back to back and take advantage of it. So whether you are reading the blog and then going through it, support resistance through Fibonacci. So let's see, we are here and we go to, from here, to draw a Fibonacci. We have drawn a Fibonacci, and last point of support was 88.6, as you can see. So we'll take this out. 38 not required, 50 not required, 60 now, for this is not required, 60. So we got a Fibonacci from this point to this point, and we got a 88.6. so we have four supports here. One is the 88.6 Fibonacci, as Sri said, and then we had an extended previous period pivot points. We have a base formation support, and the base formation actually keeps on going. So how to extend this, what you can do, you can go to configure and then do this September 11, September 12, September 13, September 16. I don't know what I'm doing. Sorry, I'm doing a mistake. So you have to do this December 30, December 31st. Yeah, see how it is increasing. January 2nd and January 3rd. So as long as this support is actually valid, we can keep on doing this to see whether the support is still valid or not. So we have Fibonacci support, we have base formation support, we have extended pivot point support, we have candlestick support, and we have the Bollinger Band dynamic crack and snapback. So this can be a support, and with this support we can buy. So this way I can identify a support. So this way we have identified a support, and while going through this pivot point discussion, we got a pivot point support there, and then yeah, and there is no looking back. Once we have cleared all this mess, once we have cleared all this mesh, so we close above, close above, close above. So there is no looking back from this point, and price skyrocketed from that point. All right, so yeah, so this is about the support. Now let's talk about resistance. All right, any questions on support so far? Any question on support? Do you want to repeat anything? Please type in your question. Okay, if no, then we'll go to and identify a resistance. Yeah, so let's identify a resistance. You can tell me your currency pair, so that it will be easier. for you to. So otherwise, if you do not type in your preferred currency pairs, what I'll do, I'll just do a resistance which is a downtrend. So for example, you go to Aussie to see a effect of a resistance here. Resistance can be again many ways. So this in the first one we'll be doing, we can actually hide it because we are finding a resistance. So I'll do this. Okay, so this is Bollinger Band top. Alright, let's find a resistance in this chart, so that this chart is the pivot point. How to find it out of identify a resistance in the recent past. We'll not go 10 years back. We'll just see. There is a question, sir, could you explain bit detail Bollinger Band limits? Bollinger Band limits. Bollinger Band limits, if you are asking me, the limit means the two standard deviations like this one. This is, if you are asking me, this is the limit. Is it the one question you are asking? Is your limit corresponds to standard deviation? What is your limit? Limit means what? Can you please explain? So that I am not giving a wrong answer. 3. When you have written bit detail Bollinger Band limits, limits means what? Is it standard deviation you are asking? Right? Yes, no. Okay, the he is saying that how BBL calculates BBL low and high. Simple. It's very simple. Okay, so simple means what? The question is how Bollinger Band's upper limit and lower limits in the form of Bollinger Band up and Bollinger Band down are calculated. That is a simple question. So what we'll do, if we make it invisible and make it middle one as an invisible one. So for example, if this is the visible one, this is Bollinger Band 20 period simple moving average. If you don't believe this, what you can do is, now this is some Bollinger Band 20 period simple moving average, as you can see here. What you can do, you can go and go and add one moving average which is, for example, 20 period, and make it simple, because that's the Bollinger Band, and make it deep. They will be actually same. See that they're actually same, isn't it? So with this proof, that Bollinger Band middle is a 20 period simple moving average. So if we put a standard deviation on a 20 period moving average, what we will do, we will take the 20 period standard deviation. So let me type in so that you understand what it is. I'm just answering another question. I'll come back to the previous question. Okay, so if we type in M equal to moving average, simple moving average of 20, simple moving average 20 on the close. So if we are typing in this, the standard deviation, the upper now we will write down the standard deviation. The standard deviation of the 20 would be calculated how? Any idea? Anyone knowing mathematics or remembering statistics can tell me how to calculate the standard deviation, please? I'll give you 1 minute time. Simple question, how to calculate the standard deviation from the simple moving average. Yeah, any mathematician here? What he says, difference between 20 SMA high and 20 SMA low. So that is that why I got one response to my question. So if you type in more, please, that would be great. Okay, simple. If you are struggling with that, I'll help you with that. But thank you, Marty, for trying to answer. If the moving average is SMA 20 close, the standard deviation is simple. It is a formula which is actually there, which is known as standard deviation, STD. STD is the standard deviation. We are doing a 20 period, so we'll do a standard deviation of 20, and we are doing a standard deviation of M. So we'll type it M. So what does it mean? M means simple moving average of the close, and now standard deviation is, we are taking standard deviation STD, which is the root mean square deviation. That means you have to different, yeah, what you said, Marty, is very close actually. What you have to do is you have to take the difference. For example, M1, M2, M3. M1 is first one sample level is 2, is second bar, is 3, third bar. So this way we have 20 bars, and what you have to do, you have to take the difference of those 20 bars price or the value, and take a deviation from the mean, which is the M, simple moving average, and add that and take a root mean square deviation. So it is a root mean square deviation. So if you type in Google, you will understand better. Standard deviation. Yeah, if you type in standard deviation, it will tell you and variance. So it is the root mean square deviation. So this is the one. So what does it mean? Xi is the each value, as I said, M1, M2, M3 to M20, minus the mu. Mu is the population mean, which is M. So you take the deviation and then square it, and then sum it, and square, sum, and then divide by 20, because we are interested about 20, and then root mean root. So it is root mean square. So it is a root mean square deviation, if you remember from your statistics days. So this is how root mean square deviation, and this is standard deviation is sigma. So this sigma is this is the calculation, and the calculation is done through this root mean square deviation, which is standard deviation of 20. So that now how we'll get a upper band? Now it's simple actually. The upper Bollinger band is equal to M plus STD deviation, like this one. You don't have a gap here, yeah. And the lower Bollinger band, upper lower Bollinger band is M minus standard deviation. So this way the Bollinger bands limits are calculated. We have to multiply this with the factor. For example, if we are taking a 2 standard deviation, we multiply it by 2, and similarly we multiply it by 2. If it is 1, then it will be 1 and 1, but generally speaking we do 2, 22. So this is the formula of upper limits and lower limits of Bollinger band. Did I answer your question? She said very good, thank you. Yeah, so this way what you can do, you can put the upper and the lower Bollinger band on the chart. So we have did that, and we don't want the middle one, so we can actually, and this we are interested in upper. So now the resistance, how to see the resistance of this one is, let's say we are here on this, how to find the resistance. As I told you, and Sri also contributed, and you all contributed. Supposing we are here, our job is 2-3 things. So I think not more than 2, the 3. So the first of all is need to see what is it. What is this one? This is the bearish, stronger engulfing, because it has engulfed two two candles before. So this is a strong, not the strongest, but the stronger. So we saw bearish engulfing. We can actually type in here. So to find out the resistance, we can write bearish engulfing. Now strong, actually we write STR, stronger bearish engulfing, number 1. And the second one, when we are here on 2nd of January, our job is to from here we go back, and our principle is very simple. Just go to the previous swing high and take that swing out to the swing low. Swing low is this one, and see what is the Fibonacci resistance. So the Fibonacci resistance we got 78.6 and 88.6 in front of us. 78.6 and 88.6, and it could not actually meet 88.6. If you are not satisfied, you just take that out. So we got a 78.6 Fibonacci, which is a crack and snapback. Not only that, so remember this is a 2nd January and the pivot point actually ended on 31st of December, but we can extend the pivot points to see whether it is a pivot point crack and snapback. So what we saw here, to find the resistance, always try to do this. We saw a stronger bearish engulfing, number one. Number two, we saw a crack and snapback. Before that, we saw a Fibonacci rejection, 78.6. We saw a crack and snapback on the pivot points. On the pivot points. And what else? We saw a crack and snapback on the Bollinger. If you agree with me here, so we saw a crack and snapback on the Bollinger. So we saw 4 resistance here. Stronger bearish engulfing at a resistance of Fibonacci, previous period pivot points, a crack and snapback because it closed above, and I hope you are understanding what I'm saying. Let me show you. So it closed above the previous period R2 and closed below the previous period R2. This is crack and snapback on the pivot points. On the pivot points, we already seen a stronger bearish bar, already seen a Fibonacci which is 78.6, and the Bollinger band. So Bollinger band close above and close below is the Bollinger band snapback. So this is a resistance. This can be considered as a resistance. So the best way is to remember resistance as 3, 4, 5 things. I think the first one is a zone of support or a zone of resistance, number one. Number two is the Fibonacci, number two. And the number three is either the same month pivot point or the previous month extended pivot points, number three. Number 4 is Bollinger Band crack and snapback, dynamic, number 4. And the last but not the least is the contextual candlestick, reversals. So these are the 5 things. If you remember, you'll be doing good, very good on a resistance. So if I have to go back to my this thing, so I'll take this out. And so how to identify the support resistance is through Fibonacci, number 1. Number 2 is either pivot points, same month or same day or same week, doesn't matter, depending on the time period. Pivot points. Pivot points means R1, R2, R3, S1, S2, S3, and the main pivot. And the third one is extended from the extended pivot points previous month. So this is same period, current period, and this is previous period. Yeah. And actually you can do it as 2A and 2B. So 2A and 2B, and 3 is your what did I say, Fibonacci pivot points, Bollinger band, especially crack and snapback. Those of you who wants to write down, please write down. Crack and snapback. And fourth is again whether it is pivot points, I prefer crack and snapback. So crack and purposefully I'm typing in, I'm not copying and pasting, so that it is getting registered in my brain. My brain is very weak. Crack and snapback. Yeah. Unless and until I repeat, I cannot make my brain strong. Same is true for all of us. And what else? So we did candlestick. Candlestick. I'm missing one, I think. What am I missing? I told you 5 things. Fibonacci, pivot point, extended pivot points. I think, yeah, I made it 2A, 2AB. Yes, that's why it is 5. Yeah, Bollinger Band and candlestick. These are the only 4 thing. 2A, 2B. If you make it 3 and make it 3 and 4, it will be 5. These are the 5 things which can be of which can be actually. We need to remember that this is fixed. This is fixed. Fixed means horizontal, and this is fixed. Position is fixed because they are straight lines. This is dynamic because it is a band, and this is contextual. Without context, it is useless. Contextual. So if I am making spelling mistake, please let me know. So yeah, 3 fixed. One is Fibonacci and current period pivot, extended previous period pivot points. One is dynamic Bollinger Band. One is candlestick reversal, which is contextual. So if you can remember these 5 things, you will be never, not never, maybe very close, 99% or 90%, at least 75%, 80%, whatever the percentage is. You will be identifying the support and resistance um, very easily. Did I answer your question, Bonkim? You have asked 4 questions. I have tried to answer 2 of them, support and resistance. Is it clear? Do you have any other questions on support and resistance? Else, please let me know. Bonkim says, yes, it is clear now. Fantastic, brilliant. Thank you for that. And now pivot points I have already discussed. So I'll take this to the top. I have already discussed here. Support, resistance, pivot points. Now the next questions you are asking is Heikin Ashi. Heikin Ashi is very good. So let's minimize this. I always sometimes I change these mouse pointers to my to safeguard my left finger, index finger actually, so that I can not use my middle finger. Not in that sense, but yeah. Okay, so I can see I'm using my right hand. So, okay, so Heikin Ashi, what you can do is you can click here and go to that price, and then go down. I'm using another screen, so just I'll go to price and then add the price. So what I am trying to do here is add the price Heikin Ashi. This Heikin Ashi is in orange and I think this color is tile. So what is happening here? Why this is happening? Why it is not going down? Okay, it's not going down. I'll just bring it up. Okay. Now we are discussing Heikin Ashi. So what we'll do, we will do it as a cursor, and then we take this out, so we have everything which Bankim has requested us to discuss today. Now we have Heikin Ashi as well as superimposed on the chart. I'll make it. Alright. So now we will try to understand the principles of Heikin Ashi. And what does it mean? It means that Heikin Ashi, unlike candlesticks, in candlesticks we have the major ones in candlestick. If you allow me to type in, I'll just write down the candlesticks. Our favorite candlesticks are whether it is bullish or bearish, doesn't matter. Engulfing, and then we have morning star, evening star. So morning, evening star, Then we have dark cloud cover and piercing. So dark cloud and piercing. So one, two, morning star, one, two, three. So let's make it this way so it is easy. Engulfing morning evening star, then dark cloud cover piercing, and then we have hammer, inverted hammer, and then we have harami. So these are the continuation is my favorite. Only one pattern, yeah, you know that, yeah, only one, that is 2 bar reversal and 3 bar reversals, yeah. So these are the if we combine this with bearish and bullish, you'll have 10 patterns, not more than that, yeah. So you have 10 patterns of candlesticks in front of you. But in Heikin Ashi we have only two. Most probably we have three. So what are those three? So let's see. We write Heikin Ashi in Heikin. I think this is the spelling. Yeah. We have a hammer. We have harami. We have dozy. Only three. Only three, and bearish and bullish. So we have, yeah. So we have three, and yeah. So in Heikin we have only three. So let's see, and they are not very perfect like candlesticks. So let's see hammer. So I would say in Heikin this is a hammer, and this is a hammer. So this is a Heikin hammer, and this is a dozy. So that's an indecision. Indecision at the middle, in doji, indecision in the middle means possible continuation. Indecision at the end of, like this is the end of a bullish run, possible. Indecision at the possible end is a possible reversal. So these dojis are reversals and these dojis are continuation, yeah. So we saw hammer. So we saw hammer. So hammer, generally, as you see, hammers are bullish kind of Heikin reversals, and dojis are indecisions. If they are coming at the end, they can reverse the trend. At the middle, they can continue the trend here. Like this one is in the middle. Here, continue. So what else? We had one harami. So apart from hammer, dozy, we let us identify harami. Harami is, as you know, is a reversal pattern. Harami, like this one, is a harami, bullish harami, because the body is within the mother's womb. So this is bullish harami. This is a bearish harami because the body is inside this. Also a dozy, but somehow it is a harami, and so on and so forth. This is a kind of harami, and so on and so forth. So these are the three things, three patterns: hammer, harami, dozy in Aikinasi. Alright, if that is clear, now let us merge everything Bankim has requested us to discuss: support, resistance, Aikinasi. So and pivot points. So we'll merge this and we'll try to understand a strategy based on this. So if that is the case, let's so far so good. Any questions or hammer, or sorry, Heikin and candlestick, please? I'll give you 1 or 2 minutes time to type in the questions, please. Ask questions so that I can learn more. Yeah, Selvan said hammer. Just confused between BBL dynamic. Okay, I'll come back to BBL dynamic. Selvan said hammer. Okay, Bunkim support resistance. So you are writing support resistance, Bunkim, and Selvan writing hammer. So what does it mean? Can you please complete the sentence? Or tell me so far you have understood it clearly. The hammer, Heikin Ashi, harami Heikin Ashi, dozy Heikin Ashi. Also, if you have any other question. So Bankim says it is clear so far. Any other? Shell says I was telling you to add hammer. Yes. Oh, yeah. Brilliant. Thank you very much. Thank you. Okay. So so far so good. Clear. Now we'll try to think of all these 4 or 5 points support or resistance, pivot points, current period, extended period, previous, Bollinger band, and candlestick, and then I'll come back to the BBL dynamic. Yeah. Okay. So let's make a strategy on that. Try to. Okay. The okay. So so supposing we'll delete the extra things which we have done, so that our chart is clear, not clumsy. Okay. Now we are here. We are trying to do a strategize our understanding of support resistance and pivot points and harami and candlesticks and harami, Heikin Ashi, and so on and so forth. Alright, so we are here. What to do? First of all, our job is to put a Fibonacci as we did before. So we take this out. So we have only 78.6 because we saw a stronger bearish engulfing. Now this can be tricky. Those of you who are not very trained or you have not given enough time to train your eyes, this is actually a harami. Although it is of same color, but that is actually a harami in Heikin Ashi. So what we are seeing a harami Heikin Ashi at a resistance of 78.6. We are seeing a stronger bearish engulfing at a pivot point, extended pivot point resistance number 2. So harami at Fibonacci number 1, engulfing at pivot point number 2, and engulf and evening star or engulfing at a Bollinger band crack and snapback number 3, pivot point crack and snapback number 4. So we saw 4-5 things here. So what we will do, we'll try to take a trade here to short the market. So we are now to strategize the 4-5 concepts of resistance, Fibonacci, pivot points, Bollinger band, crack and snapback, candlesticks, and Heikin Ashi, and mixing it. So this mixing should be a very clear thing to you. So what I said, is it clear before I go bar by bar? Are you ready to short the market there? Seeing the harami, Heikin Ashi, seeing the stronger engulfing, seeing the Fibonacci, seeing the previous period extended pivot point, seeing the Bollinger band, seeing the candlestick. Bankim says yes. Alright, so if we are shorting the market, we'll wait for this low to be taken out. We short the market, let's see what happens. So this is starting, we are enjoying more, enjoying more, and this is fantastic. Now we are here. Now we are here on the Heikin Ashi, because the question was on the Heikin Ashi. I'll not go back to candlesticks, so I'll stick on to Heikin Ashi now. Now we are on the Heikin Ashi. So what we will do, I'll now I'm in the trade, so I'll manage the trade now. So now we are here. We have started the market on this date, 2nd of January. Now we are here on 13th of January. And this we'll ask this Heikin Ashi, is the close of this bullish Heikin Ashi is above the bearish Heikin Ashi? Then it is no. The answer is no. So we'll hang on to this trade. So this is again a harami, as you can see. So this is again a harami. Color does not matter. So this is a harami. This is a harami. So this is a 2-bar reversal, because both the Heikin Ashi are not closing above the bearish Heikin Ashi is high, which is at 69.11. So 69.11. So Heikin Ashi has to close above 69.11 and high needs to be taken out. So far so good. Any question? How to manage the trade? Just a yes. It is clear. Very good. So we are hanging on to the trade. We are not getting panicky and getting out. So we go to next one. Fantastic. So this is 3 Heikin Ashis. This I love this one. I really love this one. So this is one Heikin Ashi which did not close above. Second Heikin Ashi which did not close above the bearish Heikin Ashi. This is third Heikin Ashi which did not close above the bearish Heikin Ashi, which is here. So if you have a doubt, you can actually draw a line on this one here, which is 69.11, 69.11.1. So these 3 candlesticks are not closing above, some Heikin Ashis are not closing above this Heikin Ashi. So what we will do, we will short the market again here based on our understanding of contextual candlestick continuation. Yeah, so this is the one I was referring to, contextual candlestick reversals and continuation. So yeah, this is the one I forgot, continuation, which was my favorite, as I told you. So continuation. Now we have a candlestick, sorry, Heikin Ashi, because we are discussing Heikin Ashi continuation, because this 3 Heikin Ashi's close was not above this Heikin Ashi's bearish Heikin Ashi above. Is it clear? See how I am deriving or extending our understanding of candlestick continuation into Heikin Ashi. Is it clear? Do you have any question? Very good, excellent. You are very intelligent. Okay. We are hanging on to the trade because we don't want to lose our position as the old man, and then we hang on. And now this fourth one did not close above this. So what we'll write, we'll just type in 4 here, so that there are 4 candlesticks Heikin Ashi possible reversals. Yeah. So 4 possible reversals. I don't know why. Yeah. So 4 possible Heikin Ashi reversals. So if you have balls of steel, sorry for that. So what you can do, you can sell the market here. Yeah. So you are strong, and you are selling technically. So this close is not above this high. So we are selling the market on a contextual continuation candlestick. What is the, yeah? So what is the context here? So you can actually draw a Fibonacci, small Fibonacci from this high, because now we are here from this latest high to this latest low, and they see 38.2. 38.2 is still a possibility of holding on to this market. So we have 3 short positions here, because Bonkim said we will short the market on the Harami. So let's take this for 50 out, 60 out, 78 out, 88 out. So we have 38.2. Bonkim started to start the market from here because that was a Harami. So this is our first short. We can type in here short. I love this, short the market, because we are shorting the market with 5 context. This is very good. So short the market, and then we are actually shorting the market again here, because that's a 3 Heikin Ashi reversal. We are shorting the market again here because that is 4. We don't know the right hand side. No one knows the right hand side. We can be stopped out immediately on the next day. Okay. So we have 3 running positions, and then we are happy. We are happy, happier, happiest, happy. I don't know the English. And then we are happy. So now this one here, this is a doji. So this is a doji. This is a doji as well as Harami. This is a doji as well as a harami. So this doji and harami is appearing after this run, which is a big run, because if we take the scale, so that's a 353 pips drop. After the 353 pips drop, we are having a harami and a doji. There's possible reversal, but we don't panic. We wait for the Heikin Ashi to close above this. Let's see. Yeah, so this close is above this one. Now this high has to be taken out. Yeah, we are not closing the trade, my dear friend. So we are not closing the trade. In fact, what we are doing, we are very greedy. We are shorting the market here again. Tell me why. Tell me why. Why did I short the market there? Anyone? Bankim says resistance. Who else? C means continuation. Yeah. What else? Why we are shorting the market there? Possible short. We can get out. Yeah, it can be immediately stopped out, but that's definitely a possible short. Anyone? Write something, say something. Don't don't sigh. She says oversold. We don't sell oversold, my dear. We sell overbought. So that's a wrong, incorrect answer, Sri. And where did you short at support question mark? That's a question mark. Yes, definitely. Outside bar, seeing the outside bar, we did no, we are discussing Heikin Ashi. There is no bar here. We are discussing outside. First of all, this is not an outside bar in Heikin Ashi terminology, but we are still interested to short the market. Why? Try. Break of resistance and pull back. No, I'm not that technical. I'm very simple in my technical analysis. So I require a simple answer. The answer is actually related to this C's before. I'll give you a hint. Why we shorted the market here? On the same reason we want to short the market here. Why? Previous support, retest of the break of the support. Yeah, Selvan is saying the previous support, break of the retest. Yeah, that is a possibility, but I'm not I'm not even going there, but you are right, so you can do that. 67.54 previous support now become resistance, but I'm looking for a very simple answer. No, continuation. Yeah, that's the one, continuation. Thanks, Marty. That's a continuation. What is a continuation? Continuation means this two Heikin Ashis, 1 and 2 bullish Heikin Ashis, has not closed above the 2, because now we are doing 2 by 2. Now we are not doing 1 by 1. So this is 1, this is 2. So if you are not understanding, I'll write it down. So this is first bullish Heikin Ashi. This is second bullish Heikin Ashi. This is first bearish Heikin Ashi. This is second bearish Heikin Ashi. Is it clear, my numbering system? Can you say yes or no? Yes. So now we are actually seeing that we are comparing 2 versus 2, not 1 versus 1. So we are saying that we are saying to ourselves, this two Heikin Ashi, if I combine 2 Heikin Ashi's close is here, has not closed above the 2 bearish Heikin Ashi's high. Can I do that? As I did the pivot point extension, now I am doing a extension of 1 to 2. So I'm taking the highest close of these 2 bullish Heikin Ashis, which is here, and I'm taking the highest high of the 2 bearish Heikin Ashis, which is here, and I'm seeing these 2 Heikin Ashis close is not above this 2 Heikin Ashis high. So that's a continuation. Thanks, Marty. You are brilliant. and you have not hesitated, and that is the answer I was looking for. Very simple. If this close is not above this high, we short the market. So we short the market here. Let's see, we can be stopped out. We are taking a risk. Of course, trading is risky, and we are still on the market, still in the market, laughing on this possible support, and then on this one here, we'll see. We'll wait here to close the Heikin Ashi above this high. Let's see. Now this close is above this high. Now this close is above this high, so we are waiting for this high to be taken out, or again we want to short the market here. Why are we trying to, why we want to short the market again here? Why? Tell me. Same reason. Selvin says same reason. So I don't know whether Selvin is saying resistance becoming support is becoming resistance, um, and rejection there. Are you referring to the same, Selvin? No, Selvin is saying the same. These two. So these two. Now I'll try copy this. So this is one bullish Heikin Ashi. This is two bearish Heikin Ashi. This is one bearish Heikin Ashi. This is two bearish Heikin Ashi. So these two highest closes here has not above the highest high of these two. So we'll say this is continuation, and we'll sell the market. Is it clear? Are you getting panic? Yes, I am. Means what? You are panic or you are clear? Panic. Yeah, I understand, because we are trying to sell the support. Yeah, that's quite panic, isn't it? Yeah, so if you are not very, if you have not experienced this 1 2 or 1 bar reversal, 2 bar reversal, close not above the high, close not below the low, you'll definitely panic, and that's panic is understandable. But if you have seen this many times, thousand times, then possibly you'll not panic, you'll short the market. Anyone, any comment on here? Bunkim has a comment which is truthful. Appreciate. Next comment. Participate. If you don't participate, then we'll have less interesting session. Sri saying, can you add Bollinger? Okay, I'll add Bollinger. Yeah, I have added Bollinger. Now what? But the answer should come from here. Are we selling the market? EPS, Bunkim says Fibonacci. Fibonacci for doing what? Fibonacci for going long, short, what? Bunkim says short. Okay, so if you say short, possible relative divergence. So I'll go one by one. So if you want to draw Fibonacci, where from? Bunkim, where from? Where from you want to go? Where from you want to draw this Fibonacci to go short? Do you want to draw it from here? So let's draw from here to there. So we have drawn from here to here, because we are here and the previous high is here. I'll not go to here, I'll not go there, or no, I don't do that. I'll only go to the previous one and go to the previous one and see what is the Fibonacci level which is resisting it. So 38.6, take it out. 50, take it out. I think it is 61.8, which is, yeah, 61.8. That's Fibonacci you can do. If that is your Fibonacci, or if you want to draw from here to here, that will be meaningless. So I have drawn a very simple Fibonacci from here to here. Okay, so any other thing, possible relative divergence. Relative divergence, most of the new people don't know, and it has not happened yet because we have not seen a turning point. So I'll not, yeah, no, there is no relative because it has a turning point has to happen. I'll not take that one. So are we shorting the market? If yes, why? If not, why? Okay, Selvin said same reason, so we are shorting the market, same reason here. Let's see. So 3 bar reversal now. So this 3 bar has not closed above this, so I'll just type in 3. Are you getting this 1 2 3 concept clear? That's why I'm going bar by bar, so it is very clear. Yeah, those of you who are new actually understand bar by bar understanding is the best way to understand. And yeah, this is 4 bar, so I'll bring that 4. All the 4 Heikin Ashis, not a single Heikin Ashi has closed above the second bearish Heikin Ashi. Yeah, so now we are here. Still it has not above this one. So if you are very strong in your technical analysis, what you can do, you can short the market here, you can short the market knowing very well that you can be stopped out. Yeah, let's see what happened. 5 bar, this is dozy after dozy after dozy. This is a dozy party, and the dozy party happening. So 5 bar, so I'll just type in 5 bar reversal or continuation, whatever you want to say. I'll say 5. So I'll say 5. So 5 Heikin Ashis did not close above this 2 bearish Heikin Ashi, so we'll short the market again. You must be thinking that the path has gone crazy. Okay, let's do this. Let's see. We are learning it. So any question here? We are just seeing whether the bullish Heikin Ashi close is above the bearish Heikin Ashi's high. Is this clear? Do you have any question? If you have any question, type in, please. Clear? Okay, so I got clear from you. So now we have sorted the market. 5 plus 2 plus 1. If we are pressing 0.5% trade, we have 1 2 3 4 5 6 7 8 4% trade running here. Of course this trade is very much in profit, and these trades are very much in profit. We have 3 trades very much in profit, 5 trades almost zero profit, zero loss. And let's say we are happier, happiest, I don't know the English, and happiest, happiest. Are you happy? So Bankim is saying, are you closed previous ones? No, the answer is no. Will not close the previous one because close above high taken out has not happened. That's why we will not close the previous one. So now we have 3 plus 5, 8 trades which are running in humongous profit. Are you happy? Have you understood? Questions? Bankim says more than happy. Thanks to Bankim for your brilliant question. To review support, resistance, pivot points, and Sri has added this. Thanks, Sri. And I am Bankim Heikin Ashi, and Marty's continuation. So all of you have contributed so that we have a wonderful strategy, and we have a wonderful continuation of strengthening from 1 to 1. Old man will lose the position we don't want to close. So I'll tell the story. 1 2 3 4 5 6 7 8. I told the story today to Marty. Those of you who have not read Reminiscence of a Stock Operator, who read this book, Reminiscence of a Stock Operator? The free versions is also available, so if you please read that. Reminiscence, REMINISCE, sense of a stock operator. Who read this book? Who read this book? Yes, no? Who read this book? It's about Jesse Livermore. as I was trading. Pioneer of day trading, on the basis for monthly reminiscence of a stock operator. Richest people in the world. Okay. Who read this book? Anyone? Yes, no? Just type in yes, no. Bunkim says no. Who else read this book? Reminiscence of a stock operator. If you have not read this book, please read this book. Very, 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 very well written, very funny way, and you will enjoy it. If you are witty, this is fantastic book. Marty says if you go and write and download free version of a PDF. I think free versions are available. God. All right. So and read this book and you'll enjoy. Okay. I'll request. I have been talking for the last 75 minutes. I request Marty to tell the story of the old man I told you today. Marty, please unmute your mic and please speak and tell the story or the fact about the old man of this stock operator book. Marty, can you please?
Can you hear me?
Yes, I can. What about others? Can everyone hear Marty? Please write yes, no. Sri can hear you. I can hear you. If Sri Bankim can hear you. Yeah, fantastic. Thank you very much. Marty, go ahead.
Okay, so the analogy is the young person takes the trade, and at the first point that someone might start to panic, the young person will close the trade out. And the old man doesn't want to lose his position, so he just hangs on. And that's pretty much the gist of it.
Yeah, very good. Fantastic, Marty. And when the young man, and just to add what Marty said, stated a wonderful fact and the story. When the young man, everyone, young man sold here. So I'll just replace this by short by young man, old man. Yeah, short by young man, old man. So they are all sorting the market here, and and the young man is getting out here because he's panicky. He's getting out here. He's drawing Fibonacci from here to here and so on and so forth. He's getting out here, and so I'll write young man getting out. Thanks, Marty. So I'll write down closing position by young man. So a young man is because he's new to trading. He's only 25 years old and he's studying trading or doing trading for last 3 years from 22. But the old man is 75 years old and he's trading from 22. So he has an experience of 53 years, and this fellow is having experience of 3 years. So you all are probably young in trading when you have experience of 3 years. So you are all of us are closing the trade, but the young man is forcing the, or at least wondering why the old man is laughing and not closing the trade, and he's annoyed. He's asking the old man, why you are not closing your position here, because you are running a profit, because you are running from here to here, you are running a profit of 75 pips. Why don't you close the trade? Because this is going to go up. So the young man says, so the old man says, how do you know that this is going to go up when technical has nothing as showing, and above all, I lose my position. So whatever he is having, if market goes down 100 pips down, the young man will not get it, but the old man will get 75 plus 100 to make it 222 if price comes up to this point, and if the price goes to there 291, and so on and so forth. So the old man hangs on to the position, not only hang on, but possibly he added positions here as we added, and he hanged on. Good that he has hanged on. 221. So he's having a 221 pips profit, and the young man got out here at 61, and the old man is laughing at this young man saying, I told you I'll not close my positions there because I lose my position. And now the young man is again arguing with the old man saying, close now, you're double bottom, close now, close now. So he's saying no, nothing has happened technically. I lose my position, that's why I will not close the position here. But the young man is saying you are crazy old man. Okay, let's do. And the old man is laughing, and the old man is laughing and saying, and the young man is saying, "Oh my God, this man must be knowing something. He was running a profit of 221. I was cursing him to close the trade, but now he's running a profit of 291, and I got a profit of only 52 for 44 pips." Now the young man again comes to the old man and says, "Close the position, my dear friend. Close it. Now you are running 291 and market will reverse and you will go back to 6 piece profit, so on and so forth." The old man says, "I will lose my position. I will not close the trade because I don't know whether the market is going to go down. No one knows what will happen to the market." So young man gets out at 44. Old man hangs out at 313, adding these positions. And what happens to the market? Now the young man is saying, "My dear friend, unbelievable." The old man, in a trending market, of course, that's the experience of an old man, because you can only print money or make money in a trending market, not in a ranging market. Now the young man is running a profit of 451 pips with 8 positions running, and the young man, because he was panicky here, got a profit of 44. Thanks, Marty, for the wonderful story of young man and the old man, which is from the book Reminiscence of a Stock Operator. Beautiful book, very well. I've read this book many times. This is one of the best book and best written also. Best written because it is very sometimes it is very funny, like the story of young man and old man, and some of the statements of Jesse Livermore, as captured by verbatim, by the author, was absolutely hilarious. Absolutely hilarious. Very funny. Alright. So, did I answer all your questions? And do you have any other questions on support resistance, pivot points, Fibonacci, and Heikin Ashi? You had asked one more questions, which was on the Bollinger Band, isn't it? Yeah, BBL dynamic resistance. Okay. So BBL dynamic support or dynamic resistance. Let's see. Can you explain a little bit more? What do you want to exactly know? And what currency pair? Any currency pair, or any indices, or any bond, or any cryptocurrency. It does not matter. Any gold, oil, anything. Can you type? Can you explain a little bit by talking or writing, bunking, whatever you prefer? You can unmute yourself and speak so that everyone. Bunkim says fixed support always help to understand, and go go ahead. Hmm. He is saying fixed support always helps to understand and mostly reverse from the fixed support. No, but Bollinger Band is expand always many of the time can expand and not to reverse always. Yeah, fantastic, brilliant, excellent. Yeah, I understand. So everyone has understood Bunkim's question. So Bunkim saying how to trade that. You want me to do that in candlestick or Heikin. Marty says, I think we can use 200 SMA for support and resistance as well. Yeah, of course, why not? Hi, Bunkim says Heikin is better. Okay, I'll do Heikin. Okay, let's do that. Dang, dang. Okay. Do you have anything, any spare instrument in your mind, or you want to continue with Aussie? I'm okay with anything. Euro. You said Euro. I'll go to Euro. And you have any time frame or date, like daily, 4 hourly, 1 hourly, current period, or November 2018 or what? So any what current period? Okay, fantastic. And what time frame? Daily, 4 hourly, 12 hourly, 1 minute. What time frame? Daily. Okay, brilliant. So Bankim has responded to everything. He wants to understand better. I'll come back to 200 SMA, Marty. So Bankim is saying, please help me to understand on a currency pair which is Euro USD, on a form of chart which is Heikin Ashi, time format daily, current period, how to take advantage of BB, upper band and lower band. Yeah, let's start. Okay, so we are current period means we are here. We are here. Okay, so old man is hanging on. Like we analyzed euro, or we analyzed before Aussie, but here also old man hanged on because this close is not above this one, this close is not above, this close is not above, this close is not above, he hanged on, and so on and so forth. Okay, so on this time, on this point here, sorry, my mistake. So 108, I need T. Okay, 108. So what we are seeing here is a little bit of okay. Before I start analyzing, I want you to tell me what are you seeing here. Please type in. Go ahead. Bankim says it touch Bollinger band, but it expands. Yeah. So it touch. Yeah. Bollinger band will squeeze and expand. Yeah. That is the one we know. Yeah. So please please write in your chat box what are you seeing here on the 20th of February, which is 8 days before, on Euro USD daily Heikin Ashi chart, please. I'll give you 2 minutes time. Mangin says hammer, Sri says hammer, brilliant, excellent, fantastic. What else? Hammer your brain now to answer. Marty says round number, yeah, why not? So I got one answer as hammer, I got second answer as round number 1.08. Yeah, very good. What else? Sri says, please also explain bar by bar on previous continuation. Okay, first you answer my question, then I will answer your question. Bankim says pivot support maybe. Okay, Bankim says pivot support maybe. So I'll oblige to that. I'll bring pivot points. Let's do pivot points. PPPIVOT pivot points. Add. Make it monthly. And yeah, so pivot points, yeah, very close. Yeah, you can extend this pivot points. As from our discussion, we can extend this one. Pivot points. This is support 3 1.08 27.4 08 27.4. We are extending on Bunkim's request. 08 27.4, I think. Yeah. let's see. Yeah, 0.8274, because that was S3 form line. I make this as form line. So that means a continuation. Yeah, they're possible, Bankim, but the crack and snapback has not yet happened. Very good. I appreciate that. Pivot point. Yeah, that's correct. Draw Fibonacci from October. No, Sri saying draw Fibonacci from October. October, yeah, I drawn that. October 2. I don't know why I should know. Before I draw Fibonacci, I don't draw Fibonacci blindly. Before I draw your Fibonacci, you have to tell me for what? For going long or short, and Fibonacci for short or Fibonacci for long. Otherwise, I'll not draw Fibonacci. Yeah. Fibonacci long. Okay. Sri saying Fibonacci long. So I'll draw Fibonacci from here to where? To here. Is it correct, Sri? Yes. Okay, I did that. And then what? I have drawn Fibonacci. I have drawn pivot points. Sri saying check 127. Okay, I'll oblige. Fibonacci. Bankim says Fibonacci extension. Okay. Everyone is pressurizing me, so I'll take the retracement out. So I take the retracement out and put the extension of 120, 127. No? Okay, let's make 127 visible. Wow, Sri is a genius. My dear friend Sri Utagi, how do you know this? This is a brilliant answer. So Fibonacci from whatever he has drawn, Fibonacci from he asked me to draw from here to here, and he got 127. Yeah, brilliant, fantastic. So anyone, anything else? So we Sylvan, anything from your side? Anything you saw? So we saw hammer, we saw pivot point extension, we saw Fibonacci extension, we saw round number. I think we have seen. Yeah, you have answered everything. So yeah, so that's good, very good. But that's not how we draw Fibonacci. But that's correct. Everything is correct unless as long as it is making money. So what I do, I just do, because we are here as per my principle, our principle. We'll just go to the previous swing high and to the swing low. So we'll join these two and do the extension. So I'm doing the same thing as Sri Utagi, but I'm doing on a very consistently. I am doing on this because I am here, so I'll go to the previous swing low and swing high, not up, because we could have drawn from here, we could have drawn from here, and so on and so forth. So I'll maintain my consistency. So I'll go previous swing high to swing low, and I'll draw this Fibonacci and take the this out, take this out, take this out, try this out, and make it 333 maybe, because Fibonacci advantage of Fibonacci is they'll actually match. So I'll have two Fibonacci's instead of one, but I like this Fibonacci 127. So I have two Fibonacci's, one at 261.8 of this, which is a very someone will say that this is crazy, but that's consistency. Yeah. So we have 261 point and 333. Brilliant. So we got Fibonacci extension, we got hammer, and now we are trying to answer the question of Bollinger Band extension. Yeah. So Bollinger Band will squeeze and extend, as we know, depending on what price is doing. But you have answered all my questions of what are you seeing here. That's fantastic. That is brilliant. Okay, now on Bollinger Band, we need to understand that tagging the Bollinger Band is not a problem. So like, and not only a single bar, but by the peaks and troughs. Yeah, so by the peaks and troughs. So this tagging will started from here. So this is one trough or swing low. They're almost same. So this is one, not a problem. This is two, not a problem. So if we are using candlestick or bar, that should be possibly 3 5, because I have not tested with Heikin Ashi, but anyway. So we have one swing low tagging the Bollinger, second swing low tagging the Bollinger. This is not a swing low, and so on and so forth. So it is. So if tagging the Bollinger Band is not a problem, and we should not get panic till we see 3 or 5 or 7 or 9 if we are using bars. And then what we want to see is, we want to see possible reversal from here. Yeah, so reversal in the form of hammer or stuff like that. Okay, so we'll go there. Yeah, so now we need to ask whether this close is above this high. The high is, when we are doing Heikin Ashi, we'll see Heikin Ashi. Heikin Ashi high is 1.0821. This is high 1.0821, and this close is 1.08217, and this high is 21.2. Can you see this close, which is one Heikin Ashi close, which is 1.08217. 1.08217 is higher than the high of this Heikin Ashi, which is 1.08212. So from here we are closing all our no, not closing, we are seeing the close is above, and the hammer and close above. So we are very if we are aggressive, we close the trade here, or we'll wait for this high to be taken out. So now this is high is taken out, so we'll be so we'll be interested to along the trend. So your question of Bollinger Band expansion and contraction, it depends on the price, because what we are seeing, what we are doing here is, we are taking 20 closes of the price bar, 20 close of the price 20 close of this price bar, and then doing a simple moving average, and then taking two standard deviation, two standard deviation on top of it. Yeah, so that's why they squeeze and they so if I delete for a moment, delete pivot and expand. So what we'll do for a moment, if we do this, I can see invisible for a moment. So we have taken this I'm trying to answer your question on Bollinger. There is no way, to find out when the Bollinger Band will squeeze or when the Bollinger Band will expand. Yeah, so if you do this, the Bollinger Band will come in front of you. So there is no way to know when the Bollinger Band will squeeze and when the Bollinger Band will expand. Squeezing means it will be in within a rectangle. Yeah, so for example, this is squeezing, and after that this is expansion, and this is again squeezing, and after that this is expansion, and this is squeezing, and this is squeezing, and after that there is an expansion. So and then this is not really expansion, this is actually continuation. Yeah, so it is very difficult, it is not I would say it is almost impossible to. So when, unless and until you are doing bar by bar, unless and until you're doing bar by bar, it is very difficult to say that when it will squeeze and when it will expand. It will squeeze when the bars are not doing anything. For example, if we for a moment, let's go to a 5 minutes charts to better understand if possible the squeezing and expansion of a Bollinger Band. And let's take squeezing will only happen in two occasions. Forget about this time period, this can be daily, but just to show you quick examples. Squeezing can happen when it is a continuation like this, or in a base formation like this. So if it is a base formation, then the Bollinger Band will tend to squeeze like this one, like this one. But when they are squeezing on the middle of a chart like this one, or like this one here, when they are squeezing of this one here, I hope you understand this squeeze and expansion, do you? Bankim says yes, and he says so that it is a confusion. Then how to use a support as a resistance? No, 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 it's not a confusion. Okay, okay. If you are coming from that, okay, very brilliant. So okay, I think now I got a better understanding of your question. So Bankim saying that if it is, is it a good to use as a support and resistance? I said yes, dynamic support, yes. So if you are coming from there, I'll go back to my daily time frame and bring the Heikin Ashi back. Now I think I've understood. Heikin Ashi, yeah. So now we are back to Heikin Ashi. Mm. So you are asking whether they are good or bad at good or bad for a support and resistance. I said I can say that they can be very good as a support and resistance. Why I say support for a moment, if you allow me to change this to bar chart or candlestick chart, for an example, candlestick chart. So, they are very good because they will tell you at the top or at the bottom possible that there is a crack and snapback. So this fellow has closed above, this fellow has closed below, crack and snapback, and this fellow has closed below, and this fellow has closed above the Bollinger Band. So if these things are happening, or if there is a relative divergence which we have not covered with you because you are now in your fifth or sixth months, so we'll discuss that later on. But Bollinger Band is very strong in identifying the crack and snapback or a divergence. So that way, Bollinger Band can be very useful to know possible support and resistance. But this cannot be a standalone. This has to be there has to be a pivot points or other Fibonacci's to support it. Otherwise, Bollinger Band, Fibonacci, yeah, to support it. Otherwise, what happens is, unless and until you are seeing the Bollinger Band for maybe 10 years, it is very difficult for a newcomer to interpret this as a support and resistance. So what we have to do, we have to extend this as we did in our previous example, extend this and see this crack and snap back and do that Fibonacci and get 127 or 261, whatever it is. So we do all these things, then only Bollinger Band will actually be a uh, be a be a part. This is not a standalone. Number 3 is not a standalone, but it's a part of a combination of 1 to 5, if that makes sense to you. Um, Bonky. Did I answer your question or? You are still confused? Yeah, so Bankim says yes, that is more clearer, and we cannot use. No, no, no. Out of this five, I don't think anything can be used as a single point of reference, or a single standalone system for a reversal. I don't think so. So that's why we need to have a multiple confluence of support, resistance, pivot points, Fibonacci, extension, and pivot point extensions, and Bollinger Band, and candlestick or Heikin Ashi. Yeah, so these are the 5 points which actually yeah, so they are not standalone. It can be used as a standalone, but that is very unlikely. So we have to see a confluence of these five things to take a to take a trade. Okay, so any other questions? Sri says, please also explain bar by bar on previous continuation. What was the previous continuation? I forgot. What was that? Sri, can you repeat the question? On Heikin Ashi, or which currency pair? Euro USD or Euro AUD? Which one? Euro USD? Okay. So Sri is asking a question of Euro USD. I think you are asking from here, are you? From which date should I start bar by bar? February? Okay. Let's go to February, January. So we have already shorted the, this is Heikin Ashi, I think. Yeah. Yeah, Heikin Ashi. We have sorted the market, and we have added position here. So for example, if we have sorted the market here on the Harami, and we have two Heikin Ashi continuation, three Heikin Ashi continuation, four Heikin Ashi continuation. Up to this point is okay, is it? Yes. Okay. So we are hanging on to the trade up to this point. Sorry, my mistake. Yeah. Okay, hanging on, hanging on, hanging on, hanging on. We saw a hammer. So a hammer, and then a dozy and a harami. Dozy actually can be a harami, as in front of us. So what we are looking for here is a close above a bullish Heikin Ashi, closing above the bearish Heikin Ashi's high, and then that Heikin Ashi's high taken out. Yeah, up to this clear? Yes. So we'll go to next Heikin Ashi. Now that this Heikin Ashi has closed above this Heikin Ashi, so we are waiting for to close the trade when this high is taken out by 1.1095. So it is 1.109. So 12 is coming from 1.1. So that is making it 1.1097 plus 12 is 1.119. So we'll draw a line. We'll draw a line to get out 1.1109. Everyone got where from I got 1.09? Everyone clear? If not, please tell me. What I did is high, which is 1.1097 plus 12, which is the first two decimal place. Yeah. Sorry, first two digits. 97 plus 12 is 09. Everyone got this number clear? Yeah. Everyone clear? Clear? Okay. So we'll get out if price is going above 1.1109. Close this and the next bar. So we are still hanging on because the close high is not 1.1109, and we hang on, 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 hang on. So now we let's look to see the close above the high. The high is 1.0821 and the close is 1.0217. So the close is above because high is 21.2. This close is above 21.2, which is 21.7, and the high is 1.0864 plus. Now I'll do 11 because it has come down. So 75. So I'll change this to 1.0875. Everyone clear about this 1.0875 to get out now? Yeah, I'm writing on the screen itself. Question? Could you please explain last part again? Which part? The addition of 11 or 12? Please elaborate your question so that I understand. Or you can talk back. Unmute your mic and you can talk back. So, is it the addition you are asking? How we determine exit? Yeah, I think I did. Okay, so again I'll do it. Is it clear? Is it clear here that we are shorting the market? Yes. So now we are managing the trade. Yeah. So yeah, on this date we are in the profit, so we don't do anything. On this date we are on the profit, don't do anything. Profit, don't do anything. Profit, don't do anything. Bearish, bearish Heikin Ashi, don't do anything. Bearish Heikin Ashi, don't do anything. Is it clear why we are not doing anything? Why we are not exiting? Yes, fantastic. So we move on. No, no, do not exit. Do not exit. Okay. So on this date we are asking a question mark. Where should we exit or not? Yeah, that question is coming to your mind as yeah, yes, no. Yeah, no. First of all, you said no high is taken out. That is secondary. First, you need to see the close. So the close of this bullish Heikin Ashi has to be above the high of the bearish engulfing. So bearish Heikin Ashi. Yeah. So first close and then high. Is it clear? Yeah. So first we need to see close. So now the close. Now the close of this Heikin Ashi is above the high of this. Now the close of this bullish Heikin Ashi is above the high of the bearish Heikin Ashi. Is it clear? Yes. Now we are waiting for this high to be taken out. Now we are waiting for this high to be taken out to get out. Is it clear? Yes, no? Yeah. So yes, it says go. We got it. All right. So let's see. Now this high is not taken out, so we are not out. We are hanging on, 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 hanging on. Alright, so now is this close above this Heikin Ashi? So let's see. Bullish bar Heikin Ashi close 108.21.7, and this is 108.21.2. Is this close? Bangim says yes. So now we are now, if since the close is above, now since this close is above, so we'll delete this, we'll delete this, we'll delete this. So now the since is the close is above, since the close is above, we want this high to be taken out, and the high is 108.64. We'll add 11. If you are asking why 11, then I'll explain. Heikin Ashi high is equal to 1.0864 round, 637 rounded to 64. Then we take the first two decimal place, so add, so profit at 1.08, sorry, 1.0864 plus 11. 11 I am getting from here. Is it clear? 10.8 is 11. Fantastic. If that is clear, now we are booking the profit at 1.0874 plus 1 pip for the for the spread, so we are getting 1.0875. Is it clear? Fantastic, you people are mathematician. Alright, so that's what the line here, 1.0875 to get out. So we'll delete the arrow, so we are waiting with good profit now, because if we have taken short from here, we are running at 306 pips or 264 pips or 256 pips. Let's see what happened. So this bar high is this Heikin Ashi high is 0872, so we are still hanging on. We are out here. Make sense? Fantastic. Any question? Any last minute questions? Okay, so any last minute question? Any bias on forex pairs? Bangin, I'll have my regular Bangin session not today, next day. Okay, fantastic, thank you. Any bias for any forex pair? So that is the last question I'll take and quickly go through. Any bias for any forex pair? So for example, let's do it 88 to make it quick. Any bias, make it candlesticks. So goes real quick. Aussie not having any bias, it's a continuation. If you do not agree with me, let me know. Euro Aussie no bias, continuation up. Euro CAD, I'm doing it in daily chart. So Euro CAD is some rejection here. Of course, in before Aussie and those things Aussie, yeah. So we need to remember, Selvan, we need to remember that this close is below the Bollinger Band. This close is below the Bollinger Band, yeah. So if tomorrow's close is above the Bollinger Band, and then that high is taken out, that so the bias will change, yeah. Is it clear, Selvan? Yeah, Selvan says I saw that. Very good, excellent. Now quickly go to Euro Aussie. Euro Aussie, same thing. This close is above the Bollinger Band. This is the Bollinger Band. So if the next close is below the Bollinger Band and that low is taken out, then the bias will change. EuroCAD. This close is already below, so if this close is already below, then this low taken out can be a possible correction. Those of you, this is nothing but continuation. GBP AUD. I think this is a continuation because this is a consolidation to be broken to the upside. If you are not agreeing with me, let me know. So GBP CHF. So same thing here, it has closed below the pivot, Bollinger. If this tomorrow's close is above the Bollinger, and high taken out, so next day it will be a possible bias upside. GBP USD, same thing, close below the Bollinger Band. If they close above the Bollinger Band, high taken out, then a possible change in bias. USD JPY, or even a simple correction. So this close is below this. If this tomorrow's is close above this and high taken out, then a correction or a continuation. That's a quick buzzer round. I hope I have added some value to your understanding in last 2 hours. And if you can appreciate and give feedback in our review in our Facebook or Google, or even in LinkedIn, if you can please give us some ratings, that will be. I think I have requested you to give us some ratings in LinkedIn as well. So if you go to Partha Banerjee in the LinkedIn, and if you go and see if you want to endorse me or the company, please go and write and come and give us some endorsements. That will be a real help, and you can also do it in the Google as well as in Facebook. So I really appreciate if you can please do that, and that will be a great help to us. And if you can please spread the gospel. So I showed you LinkedIn. It's not rocket science. You have to just go to my LinkedIn and then search me and then endorse my skills, or go to Google and give us a write a review. This takes only 1 minute. Or go to Facebook. If you are in Facebook, go to Facebook and please give us a go to you can either go to our company website, which is NP Financials, or you can go to our Partha Manager. I prefer give us a rating on the NP Financials. Please review that and give us a possible 5-star rating on this review. That will be a real help. Here you can do that here, recommendations and review. If you can please do that in Facebook and Google and LinkedIn, that will be a real help to us. Yeah, thank you very much, and you have a good thank you all of you for your excellent yes, Bankim, yes, Bankim says informative, fantastic. Sri says good session, very good. Thank you so very much, and I really appreciate your review and feedback, and you have a great week ahead, and talk to me in your class or in review session. Bye for now.